As of March 16, 2025, the United States is navigating a complex economic landscape characterized by trade tensions, market volatility, and policy shifts. Trade policies and market reactions. President Donald Trump's recent decision to double tariffs on Canadian steel and aluminum imports to 50% has intensified trade tensions between the U.S. and Canada. This move, a response to Ontario's electricity surcharge on U.S. states, has contributed to significant declines in major stock indices, with the S&P 500 nearing correction territory. Investors express concerns over potential inflation and slowed economic growth resulting from these escalating trade disputes. In the manufacturing sector, companies like CRAZART are expanding domestic production to mitigate tariff impacts and meet retailer demands for U.S.-made goods. The largest toy maker in the U.S. plans to increase its domestic manufacturing operations by 50%, investing in facilities in Tennessee and Florida. This strategy aims to reduce costs, shorten delivery times, and shield the company from tariff fluctuations. Federal workforce reductions. The Trump administration is implementing significant reductions in force across various federal agencies, resulting in tens of thousands of job losses. Notably, the Department of Veterans Affairs plans to cut 80,000 jobs to return to 2019 staffing levels, sparking concerns due to the high percentage of veterans in its workforce. Other agencies, including the Department of Education, NOAA, and the IRS, are also facing substantial layoffs. These measures are part of a broader strategy to streamline and reduce the federal workforce. Economic indicators. The U.S. economy continues to exhibit growth, with real gross domestic product (GDP) increasing at an annual rate of 2.3% in the fourth quarter of 2024, following a 3.1% rise in the third quarter. Personal consumption expenditures (PCE) grew by 6.4% nationally in 2023, with all 50 states and the District of Columbia experiencing increases. The growth rate varied from 8.1% in Florida to 4.7% in Iowa. Inflation trends. Inflation has been a significant concern in recent years, peaking at 9.1%. In 2022, factors such as structural housing shortages, climate change impacts on food and energy prices, and substantial government debt have contributed to rising inflation. By July 2024, inflation had moderated to 2.9%, with rising rents and child care costs remaining as primary drivers. Global perception. The perception of the U.S. economy's invincibility is being challenged due to the volatility of current trade policies. Unpredictable tariffs have led to corporate uncertainty, dampened sentiment, and warnings of a potential recession.